Good morning. This is Eric.
Hello, Eric. It's Sergio in South Texas. How are you?
Hey, Sergio. I'm doing good. How are you?
Good, man. Let's see if we can get rolling here. Okay, friend.
Let's do it.
So, some economists in the news saying that the Fed will likely announce a 3/4 of a point increase in the short-term rate, a hefty amount. Again, another big one. The highest level since 2018, they say. Is the economy slowing to the point where you say there's a recession? Joining me from Young Voices, commentator Eric Peterson. Man, what do you make of the numbers? They're all over the place, pal. I mean, the Fed trying to slow things down. You got hiring that's somewhat strong. I mean, I'll give you that. But then I compare the hiring to what was it, the last number? 11 million openings, and then millions of people leaving their jobs and going to get, I don't know, something else or unemployment. I don't know what's going on. Like 4 million people leaving, 11 million job openings, and it seems like you can't satiate the need for employees out there. Help wanted signs all over the place. And then on the spending side, spending is strong, but yet if you calculate in the inflation, is it really that strong? What do you make of all these numbers, Eric?
Yeah, I think a lot of economists are really struggling to make sense with these numbers. I think that's why there's a little bit something to, the talk about, well, are we really in a recession? Now, of course, the last 10 times that we have had a double or two consecutive quarters of negative GDP growth, we have declared that a recession. Though most of the times when we are in a recession, as you point out, we see a much weakening job market. We haven't seen that right now. We still have double the amount of openings as there are people looking for jobs. And our unemployment rate, continues to be, around 3.6%. If you look at the last time we had stagflation in the late 70s, early 80s, our unemployment rate was double that. So I'm hoping that the Fed feels that they have enough slack in the labor market to really work and get inflation under control, because that is the economic problem that Americans are feeling most acutely right now. And it's really hurting those on, fixed incomes or those at the bottom end of the wage scale.
Yes, sir. No, I understand. Yeah, I was laughing. I was thinking, all those comments from the White House yesterday that, well, we really can't call it a recession. Oh, now they're going to be playing the redefinition. So what, we're in a trans session now, or a non-binary session now? You really can't call it a recession. It's like trans session, a recession that's masquerading, for growth right now. I hope you're not going to be buying a home or a car anytime soon. Are you, Eric?
No, I recently bought a house, and I'm glad to get that lower rate. So I would say, right, one of the benefits that you might see, right, are lower home prices, right? It was one of the strangest things that a lot of us who pay attention to this saw home prices absolutely just shoot through the roof during COVID. And, we understand a lot of folks were trying to move out of cities and get, more space, and that makes a lot of sense. But you had a time where people earnings were down, or you had 20% unemployment, and home prices were shooting through the roof. Part of that was because of the Fed's money supply was very cheap to borrow. And a lot of folks leveraged up and ended up buying houses that they probably won't be able to afford now that rates are going to be a little higher.
What would you say, by the way, with Young Voices, Eric Peterson, my guest, what would you say to people who'd mentioned to you, it's not fair to blame Joe Biden for all this mess, because we're seeing wave upon wave of reaction, like a rubber band just flailing all over the place. You got low supplies, low inventory, computer chip problems, markets shutting down their production in China because they clamp down and shut down their economy, and then we get more stuff that's not in the supply chain. What would you say that it's not fair to blame Joe Biden for all the economic mess we're on? Because you mentioned housing, for example. Well, it was a seller's market, like people sopping up homes all over the place. And now we're flipping everything, high interest rates. Now it's a buyer's market, right? Now we're all this inventory that's supposed to start increasing here pretty soon. What do you make of what do you say to people? It's saying it's not fair because we're just in the throes of post-COVID, trying to readjust the economic activity.
Yeah, certainly inflation is not just happening in the United States, right? If you look across the world, look in places like Western Europe, the sort of closest analogous area to the United States, they're seeing high inflation as well. Now that said, there's certainly steps that the president and Congress can use to mitigate inflation. It certainly doesn't help get our energy prices down when you have the president talk about wanting to cut down on energy exploration in the United States. Certainly, Congress putting more fiscal stimulus into the economy at the time that we were seeing a low unemployment rate and good economic growth certainly didn't help with inflation. But the Fed has had a long period of cheap money for a long period of time. I've seen you look about $9 trillion of liquidity into the market since the Great Recession. And all that money eventually was going to cause inflation.
My goodness. Well, what do you think? Just what does your gut say? Just as an economic fan sitting in the bleachers right now, what does your gut say? When do we stop seeing these wave upon waves of the ricochet and eventually get put all trains back on their rails and everybody in their lanes? A year, 2 years? What would you say? What's your gut say?
Yeah, I would say I don't think we're still going to get normalcy for a year or two. Again, I think a lot of these supply chain problems are difficult, and they're going to take some time to fix. We've shown a lot of the problem with having so much dependence on China. As you pointed out, their COVID-0 policies has caused so much problem with our supply chain. Though I think, again, if the Fed decides they really want to fight inflation and they're going to stick to it on keeping a higher rate, I think we might see inflation not get back to normal levels, but certainly more manageable levels, maybe even as soon as 6 months.
I know lawmakers are trying to address a portion of it, passing legislation to produce more computer chips on the U.S. side, but it's more than computer chips. My goodness, it's medical equipment, Tylenol, antibiotics, personal protection gear. I'm just getting started. COVID-0, their China policy, and our Chinese dependence, I don't hear anything from major leadership addressing that issue. It's just like they want to keep things as is, keep the factory lines coming in from China, whereas we should be thinking about repatriating a lot of this production back to the U.S. to protect ourselves, or maybe bring it to this hemisphere at least. Maybe provide jobs in Central America, South America, so we don't have a lot of these folks coming this way, crossing the border illegally, gaming the asylum system. Eric, thank you for your commentary. Eric Peterson from Young Voices.